Data is suggesting that big changes are happening for both the commodities and stock markets, and these are the indicators that investors need to be paying attention to right now. Joining me today is Frank Holmes, CEO of U.S. Global Investors. Frank, the Purchasing Managers Index is up again. The latest data point is at 56. The last time that the index was at this high of a level was way back in 2018. How have we seen such a rapid recovery from the summer lows following COVID?
What's important is to look at, when you look at macro forces, and the Purchasing Manufacturers Index is a forward-looking index. The GDP number is behind this. So the Purchasing Manufacturing Index is a precursor for commodity demand. And what we saw earlier this year is it fell off a cliff. That is, China, Europe, and America fell below 50 and fell to 35. Immediately, China was the first to open up the spigot to fight the coronavirus and all the concerns of it. And then you saw the US, and then you saw Europe. What's interesting is that the trend was down with the battle between China and America over trade war. And that's important, David, because China and America are 40% of the world trade. And China is 53% of all commodity demand. Well, commodity demand is highly correlated to PMI numbers in China and America. So I always like to follow that. And so when we see the uptick in PMI, get ready for higher inflation. We've seen oil surge above 40 with it. We saw copper prices surge. Look at copper's been on a spectacular trend. That means people are ordering copper for housing, for making machines, for cars. You need much more copper for Tesla cars, etc. And any type of supply restriction out of Chile, and copper can all of a sudden surge 15%.
Yeah. So it's important to note that in all these three areas, China, the Euro area, and the US, they've all seen contractionary PMI numbers this year as a result of COVID, but they've all recovered quite rapidly. How much of this was due to government policies? Had it not been for fiscal and monetary stimulus, do you think we would have seen this recovery?
No, not at all. There's just clearly the world would be in a depression worse than the 30s. And the cartel of the G20 finance ministers is working well, and they're all printing money. And in election years in some different countries, they all print more. So we're going to see sort of an incredible amount of trillions of dollars being spent. And it's good to see because it's showing up in the PMI. The other positive note, which is showing up here in the US, is travel. So the travel hit, America a year ago used to process 2.7 million people a day, 700,000 from international flights, 2 million domestically. It fell down to less than 90,000 people a day in April. Well, that just hit an all-time high here in the past 5 months, last Friday, and almost up tenfold. So I think when we see the trade of more people flying every day, and we get over 1 million people, just like we now have PMI above 50, then we're going to see even stronger inflationary numbers.
Yeah. Do you think there's still going to be as much flight activity now in the fall as in the summertime? People are coming back from vacation. They're coming back to work after Labor Day. Can that be a headwind for airline activity, you think?
No. I think it's just a psychology of feeling safe. And then after that, it's going to be the cost of tickets. And the cost of tickets are quite low.
So Frank, on the topic of inflation, CPI numbers came in last Friday. August's reading was 1.3% year on year, which is up from July's 1%. So we are seeing a bit of an uptick in inflation, but you were telling me that the CPI is not a perfect indicator for what's really happening with inflation. Is that correct?
Well, yes, I am. And in two parts to look at this. First of all, CPI 1.3, take a look at the 10-year and 5-year and 2-year government bonds. You're losing money if you buy those bonds. It locked in for that time period. So that's a negative real rate of return. That means gold commodities trade higher. Okay. Two, if you use the CPI number that was used in 1980 when gold hit $850, silver $50 an ounce, the gold silver ratio was 17 to 1. If you use that model today, inflation's over 8%. I personally relate to, in my inflation, I am seeing is up 8%.
Okay, let's go back to PMI now. How can we link this back to investments? Why would PMI be a positive factor for stock markets? I mean, the counter argument here would be that if the economy is picking up, the Federal Reserve doesn't need to pump in as much money anymore, but for stimulus, and that would actually be bad for equities markets, wouldn't it?
We're still a long way away, David. I mean, I talked about the airlines. In April, they fell down to less than 90,000 people a day flying. A year ago, it was 2.7 million. We had a record number here in the past 5 months at 980,000 in a day. We've got a long way to go. And we've got to get the people flying up in the US a 1.5 million a day. So I don't think you have to worry about rates rising dramatically. I think what you have to see is that the PMI is in a very positive direction. That usually means hiring more people. That is another positive factor. Pick up in commodity demand for manufacturing. Low interest rates mean people can buy new cars, buy housing at a cheap rate. It's a mechanism that you're not going to have to worry about all of this until 6 months from now.
You know, people were talking about a V-shaped recovery, but there were a lot of skepticism around that theory because a lot of people think that what COVID has done to the economy is going to last for well over a year. We're going to be in financial and economic trouble for at least until another 12 to 18 months. But what the data has shown, at least the data you've talked about, is telling a different story. Are you at all surprised that we're seeing a pickup in PMI, a pickup in CPI, and also you were telling me about real estate? Why are real estate prices going up, Frank? Are you surprised at that too?
No, because there's been a big cutback in the production of homes. And it was more difficult to get a mortgage. So now mortgage rates have hit an all-time low, and it's easier for people to get financing for mortgages. So I think what's really important here is that real assets are going to be a big driver for making money, and real assets that can have expanding, increasing dividends will attract the eyeballs and capital in the capital markets. Gold stocks, they're going to have record free cash flow this quarter. Record. Yeah. And that's very bullish. Copper stocks, same thing. So I think we're in a very, very sweet spot for both stocks and for overall commodity demand. And there's so many negative people. I mean, I get it from gold. Gold falls back $20 and they want to jump off a bridge. It's ridiculous. We're in a secular bull market in gold. The 50 days above the 200-day. Gold can easily fall below the 50-day down to 200 and still maintain the secular bull market. That's what we're in. And all this money printing and all this fiscal policy to stimulate economic growth is extremely constructive for the economy. And Canada just said, the Central Bank of Canada, that they're going to maintain vigorous, rigorous, cheap money. You're seeing central banks have talked about it, buying ETFs, buying stocks. It's a new playing field.
Well, just on the topic of gold stocks, Frank, we have seen stocks go up for most companies in the sector a lot this year. The GDX last I checked was up at least 40%. And so year to date. And so don't you think that the market has already priced in this free cash flow increase that you've talked about?
No. Very few people. Look at Canada. Look at the pension funds and all those really brilliant institutions. The TSE is close to like 8% gold stocks. Their weighting is 1%. They're so underweight. So when you see these secular moves, David, like you had from 2001 to 2007, the institutions all of a sudden didn't jump in until 2003 and 2004 into gold stocks. Yeah. So we're in a nice, simple move here. It's a perfect, everyone's bearish outside of the Kitco audiences, et cetera. And gold trades higher. Gold stocks are catching the bids from investors like Warren Buffett. These are all game changers that don't happen overnight. What Warren Buffett did is all of a sudden increase the audience of people looking at gold stocks. That's pretty positive. And looking at the GLD.
One more point about the PMI, and I'll let you go here. The Caixin China manufacturing PMI is also up. What does this tell you about the Chinese economy? Because a lot of analysts were telling me about the slowdown in China and how that slowdown in growth is going to have an adverse effect on commodities. Are you seeing a different story?
A different story. And I think what's important here is the Chinese, in particular the government, is much more advanced in using AI to shut down areas. In America, it's Apple stores. If you look at Apple stores, they shut down and reopen. As soon as they're tracking all the AI data, if there's a coronavirus breakout in an area where the stores are, they're going to shut down. And they'll wait till everything's settled. What's happening in China, not just what Apple does with the store, they're doing with cities and towns. But they're trying to maintain the rest of the country functioning.
Frank, you're speaking at the Denver Gold Forum. We're going to catch up there. Can you give us a bit of a teaser as to what you'll be presenting about?
Well, I'm going to try and inform what's happening with millennials and all the negative news on Robinhood investors that actually they've done exceptionally well. And they're much more sophisticated of how they come in and look at markets, et cetera, and do research than the 90s when people discovered mutual funds, and the importance of free cash flow to attract the generalist investor and get higher valuations for these stocks the audience is going to have to be much broader. And so companies are going to have to look more like technology stocks. And that's what the wealthy companies look like. They look like SaaS stocks.
Okay, hold that thought, Frank, because we are going to follow up with you on that in a week or two. And so I look forward to speaking with you virtually at the Denver Gold Forum. Thanks for the update today. I appreciate it.
Thank you, David.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for much more.